Hey everybody, Don Snyder here, and I want to talk today a little bit about the difference between renting and owning your own home. If you know me very well, you probably know that I'm a pretty big proponent of owning the place that you live because it feels really good and you have more options about the lifestyle that you live while you're there. And even more important than those first two is that it actually puts you in a better financial position if you choose to use it as part of your wealth building strategy. So for myself and my family, the way that I view this is that, if I'm paying out that money anyways, it's going to either go to rent and I'll never see it back, or I can put it towards my mortgage and I can build an equity position that my family can then leverage later to whatever financial goals we've set for ourselves. So what I've done today is set up a total cost analysis on our Mortgage Coach software that shows the financial differences between renting and owning a comparable place. So let me get my face out of the way here and we're going to take a look at this report. So the summary table here shows that we're looking at a rent payment of about $1,400 a month with $70 estimated for renter's insurance. I'm going to compare that to a $235,000 home purchase because I feel like the quality of life that you're going to get in that $1,400 of rent or $235,000 home purchase is going to be pretty comparable. If we look at the monthly payment, we see that it's actually very comparable, right? This $1,508, it's a $38 difference, does include homeowner's insurance. It includes your property taxes estimate. And so, that's a pretty all-inclusive number, and it's really similar. There is cash to close that we've got to keep in mind. In this case, it's going to be around $16,000 estimated there. But that's not necessarily cash that you have to have saved in your bank account. You can use gifts from friends. You could use a 401k loan. You could use down payment assistance through the state of Washington or the state of Idaho, depending on where you live. There are plenty of places where you can come up with this money or combine it with cash that you've been able to save using just a low 5% down payment to get into the home. So we're going to scroll down from here and take a look at rent versus principal paid over 5 years. So in 60 months, you could have paid around $93,000 in rent. Now that's assuming a 3% annual increase in your rent. If you're as familiar with living in an apartment as I have been in the past, then maybe you're just dreading that annual rent increase every year when you go back to sign your lease. Alternatively, in that same period of time, you could have paid about $20,500 in principal payments on a home that you own. That's what's creating that equity position for you. So I'm going to go into this more info button here up on the corner, and we're going to illustrate those differences. $93,000 in rent payment, or look at that, $90,500 in the total mortgage payment. So what happens is if you've got the 3% annual increase in rent, but your home price is appreciating while your mortgage payment stays the same, then you end up paying less over time using that mortgage. So you're paying less and you're paying down $20,500 in principal, which if you look at 5.5% appreciation on your home, which is for the Spokane market right now a pretty conservative number, and the reduction in your loan balance, you're sitting on an equity position of about $104,000, $105,000 that you otherwise would not have. So, just to make this really obvious, the total equity after 5 years of renting, you paid $93,000, and in exchange you've gotten a place to live, but you walk away with zero equity. That same, $90,000 or so over 5 years in a home, you still got a place to live and a roof over your head, and you're walking away with, over $100,000 in equity. Right? So we'll close this. We'll go down to this net worth in 5 years, and it's a pretty stark difference between the two. Now, of course, we started this out looking at $235,000 purchase price. That's great. If it's not a price point that you're attracted to, I put in an option there for $265,000. As we can see, the monthly payment does increase a little bit there, as does the amount of principal that you've paid in 5 years, right? Are you going to end up with $0 in principal, 105, 117? It all depends on what fits with your financial goals and the situation that you have today. Now, if you have questions about how we can make these scenarios fit into your current financial situation or the life that you're planning for yourself and for your family, then just give me a call and we'll put together a custom report just like this with a roadmap that's going to help get from where you are to owning your next home. All right, well, that's it for today. Have a good one.